This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody just hold on. I don't know what we're going to have here.
That's what brings the viewers back. That a boy.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
Good morning, everybody. It's Wednesday, August 27th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had September corn down 1 3/4 at 385 3/4. September soybeans were down a half at 1028 1/4. And September Chicago wheat was down 6 1/4 at 503 1/4. No export sales announcements here this morning, guys. So we'll jump right in. I guess a couple of things to note here this morning. Stories circulating. We're going to have a Chinese delegation apparently coming to Washington either tomorrow or Friday. They're meeting with Jameson Greer to continue discussions there. So we'll have to once again be cognizant of headlines that are going to come out of those meetings. And I know, as you guys have touched on a number of times already here this week, we're coming into first notice day on Friday. So I guess with that, Dustin, why don't you kick us off with a few thoughts here this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Yep. So, not to be a broken record, first notice day on Friday means we have any basis only contracts need to be rolled or sold by Thursday. And traditionally, in modern times, the last 10 years, this has been an extremely weak period for the market because a lot of commercials will not allow growers to keep rolling old crop bushels into new crop, whether that's basis only or DP. Not every place, but a lot of them don't. So it's not really a roll or sell question. A lot of it's just sell, right? And then there's forced selling if they're not selling, it's just because they're not allowed to keep it going. So the theory behind that would be that all of this selling gets jammed into a very small period of time, and this would be it, right? Today and going through Thursday. Now, we've had some friendlier things happen. We've already had a very big price drop, 13% from the spring prices. I think 2014 is a good model year. We always kind of joke, right? Everyone is online trying to see what chart pattern matches up to prior years. So you got to be careful doing that just because every year has got its own fundamentals. But I think it's a good reminder of what was going on in 2014 is we ultimately had a well above trend line yield beat. And, of course, at this time of year, the market was onto that idea. It had dropped quite a bit by this point in time. But it dropped another 40 plus cents in the month of September after it already dropped from 462 into the mid threes. It dropped down to the low threes by the time we got to the end of the September timeframe. And much different times, of course, but it's just a reminder. I think right now we tend to want to look at pro farmer numbers as being favorable compared to what the USDA has written down. I don't want to lose sight, though, that the market's been bearish ever since the July 1st notice day. We had what feels like an orderly flow of supply of old crop to buyers. And we didn't see the big inversions that we saw in Feb last right through those contracts. We got back down to near carry markets through the end of those old crop contracts. So to me, it doesn't feel like pipeline 1.3 billion bushel carryout, which is written down in the balance sheet. It could be. It just doesn't feel like that. Basis and spreads. And so when you go into like record number of acres, basically we're right near the record, and we're talking about something that we've never seen before. We've never seen a yield above 179. We're talking about 182.7 is a bullish number from Pro Farmer. You got to go back to that balance sheet and say we're projecting something so far above trend line demand that we have lots of leeway on the balance sheet And we have to go back to years like 2014, in my opinion, just to remind ourselves that like once we start getting the pile of corn coming in and there's nowhere to put it, the market sometimes can't help but move. Even though there's plenty of price incentives for growers and buyers for lower prices here, through things like crop insurance, derivative payments, farm bill payments, lots of reasons that like it might be hard to go down. I still think the weight of a big crop is something that we have to consider as a possibility for risk.
Very good. Ben, what's on your mind this morning?
Yeah, I think that we had probably a little rally ahead of first notice day, which has not been the norm lately. Ultimately, today, tomorrow is the end of the line for a lot of contracts. I don't know what gets us to get up and really run at this point in corn. We're getting in a window where we're going to have to realize and process all of this supply. On a positive note, demand for corn has been very solid. So the trade is, we had a little bit of volatility last week. Interestingly enough, a lot of volume traded yesterday, corn changing hands, but I think you're going to have to see some strength above the 50-day in an area where a lot of corn changed hands in the previous month in order to get any excitement about corn. And I think right now that would have to come through an aggressive trade deal with China, something like that. Same thing for beans. It just seems like it's, the trend is still down. I don't know what that influx is to get us to rally in the face of record production coming in.
Very good. I guess, Justin, anything these two gentlemen mentioned that you could put a bow on the day for us here?
Yeah, I guess my conundrum with corn is, obviously it's going to be, I think we're going to have record supply, whether it's a 178 or 188. And, with the extra acres, we're going to have just massive supply. We've got good demand, second biggest book, outside of the massive Chinese purchases that we saw years back for today's date. Mostly because, South America corn premiums have been really high. So we've been the cheapest corn. Now we know there's a massive safrinha crop and that's going to come to market. So, they've been reluctant sellers for a lot of different reasons that we've talked about on the show, currency moves, a big export bean program that's been going on to China and other countries instead of, our soybean market. So we've been, we've caught that windfall of, really big corn demand, which I think's helped, stabilize the market on breaks. That being said, that crop will come to market, whether it's 30 days from now, 60 days from now. So, my biggest concern is, we had 25-cent rally going right into harvest, getting ready to harvest a really big crop. You can argue on what the final yield is and no one knows. But that being said, I do think we're going to have an oversupply situation in Q1, between now and Q1. And so that's, typically big crops have kind of long tails. The job of the market is to pick up demand. To Dustin's point, we have giant demand numbers written down because of the supply. So if the supply does come down, I think you can shave down those demand prospects, but we still have to hit a big demand number to make it, call it 2 billion or sub 2 billion. And the way you do that is to stay competitively priced, stay cheap for a period of time and get a big demand base. So I do think that's the job of the market. What could change that? Obviously, as Ben talked about, some kind of trade deals. I think beans, getting some resolution with China would be huge, because I do think, the bean balance sheet's relatively tight. There's a lot of dry areas, especially call it Illinois and East, that have had a dry finish to especially the bean crop. I mean, the corn crop as well, but obviously beans are a little more vulnerable this time frame with filling pods, or where they abort pods, or what the bean size is. All that math goes in quite a bit to the bean yield. So if you had some positive outlooks on beans, I think that would maybe be the best chance to kind of turn the corn market as well. Because then you start looking at acres out forward. Beans have a tight carry-in. So I think we're just in a holding pattern. I think beans, to Dustin's point, I think yesterday, probably have the best shot for now of catching a bid here on a break. They had the big knee-jerk reaction after the acres, but then we're kind of having a lousy finish. If it was 85 degrees right now instead of 55 or 60, I think beans be really not liking any kind of a break. We'd probably be making new highs right now, in my opinion. But we have cool weather, and it's kind of content right here. I think the EPA stuff also has kind of some people confused on what all that means with, biodiesel demand and some of those other things. So kind of talking around circles here, but it's just, I don't see a story to Ben's point. We rallied 25 cents going into getting right ahead of harvest, right to the 50-day, kind of what you would expect in a supply bear market, in my opinion. So
Yeah, very good. I had a question last night, and I don't know if any of us know the real answer. It's like, what is going to solve this fertilizer issue out forward? We're seeing prices starting to come in. They're super high again for next year. Like, where does that whole thing shake out in your opinion? Maybe it's not the price of corn. Maybe it has to be some input stuff. We talked about cash rents a number of times, things of that nature. But like their question is on the fertilizer side.
It's a tough one. I'm not a fertilizer expert, admittedly.
Right.
A lot of it comes from areas that are in conflict. Russia, Ukraine, China, right? A lot of fertilizer around the world comes from those areas. And we probably should stop planting 97 million acres. Might help too. So, yeah, I mean, it's supply and demand, right? So you have to increase supply, reduce demand, some combination. But a lot of fertilizer comes from areas in conflict. So how do you ramp that up? I think, again, some trade deals would be super helpful. If we could resolve some conflicts with Ukraine and Russia, which obviously there's ongoing talks. If you can get some deals with China where we're more friendly, I think they start releasing more product. So I think a combination of things.
Yeah.
Honestly, I don't think there's just one solution, but it's certainly a pain in the butt. That's for sure. I mean, we'll be going on year 3, basically. If not 4, of just, escalating prices every year. So yeah, it's a tough one.
So, I mean, you mentioned the, reduction of 97 million acres and things. I mean, do you feel like some of the agronomy programs will eventually change as well? Like at some point, you just can't, to your point, 2, 3, 4 years in a row of high price fertilizer. Like you just can't throw the book at it,
Yeah. I mean, we talked about this, I don't know if it was a week ago, right around then. University of Illinois Farm Doc came out with their updated budgets. You're looking at, just going off their numbers, which I think are probably pretty close, $100 an acre loss in corn and break even in beans. Now you have areas like, let's say in the East where they might end up with, decent corn yields and maybe bad bean yields. And we had questions from clients, should we increase corn acres just because of some of the corn yields that we've been getting versus beans? I think price has to dictate that. Ratio of, look at new crop 2.35 is kind of average. So if it wasn't for the price of fertilizer, I would say, it's hard to lose too many corn acres. But when you get into a cash crunch and it's a cheaper crop to plant, naturally there's going to be some rotation back to beans. It's such, we're a pretty extreme acres number right now with 97 corn and 80 million beans. I mean, a natural rotation, you would think you'd get at least 5 million switch, in my opinion. And you probably should. So now we do have relatively, tighter carry out in beans. So I think the bean market kind of needs that, so I think we will get kind of in balance. Biggest thing is still South America. If they could just stay steady for a year, go down a little bit. It's the 20 million ton increase every year that's just hard to compete with. It's hard to get enough demand every year to offset that. And we did a really good job globally because China was such a gangbuster growth engine for soybean crush and imports, that we were able to, they were able to absorb a lot of that. But now that's a big question mark. Is their imports going to be 110 million or 100 or less? So I think that's just a tough one. So don't know the answer. It's not easy. Like I said, I still think it's, if we were, this is big picture, has nothing to do with right now, but the one thing that farmers do have here in the U.S. is a really robust farm bill program now, really subsidized crop insurance levels, talking about 80% subsidies on some high crop insurance products.
Yeah.
So if prices were to get super depressed, call it mid to low threes for a period of time, and there's a big farm bill program above the market, does that cause some kind of a cutback in South America? At some point, they import more fertilizer than we do, so, and their currency is going the opposite way. So if their costs all of a sudden get super burdensome, I think there's a question there on how great their economics are. So, hate to say lower prices, but lower prices could cure lower prices in a scenario like that where they don't have the supports that we do. They don't have those fallbacks. So you could see some interesting things happen. I'm really curious to see what happens in South America in the next 12 months, personally.
Well, very good. Well, I appreciate appreciate that insight there, Rye. Let's move over to cattle here real quick. We got no slowdown in the box beef market, and the hogs are starting to heat up. Can you maybe talk about a little bit why they're bull spreading hogs as well? We had a question here this morning. So what do you got for us?
Yeah. Well, we've essentially shaken off any kind of bearish sentiments from last week. I mean, obviously, we're seeing the impacts of, kind of slowed imports from Brazil on the beef side of things. I think that's really what is kind of compelling this market much, much higher. So it's really been following that. I'm waiting for some cash to develop here. So nothing there on that front. But there was an interesting article, or at least a blurb about JBS kind of stating that they're really going to start to ramp up exports from Australia, or at least just imports from Australia in beef. So I think there's going to be maybe a way out of some of these extremely high price scenarios through some of those outlets. So it's just going to shake things up a little bit. Obviously, we've been in this kind of parabolic move in beef, and the market has definitely responded. I mean, futures have not backed off, and really cash hasn't backed off either. Packers have a little bit more margin to spend. So it just seems like all systems are still go there. On the hog side of things, definitely seeing a little bit of a technical breakout here. I mean, we closed above the 50-day moving average, really started to accelerate, and it just kind of feels like cash is king right now. Cash is up 273 yesterday, and I think that's probably why we're seeing some pretty active bull spreading right now. I think that's really where the managed money wants to be, staying in the front end, especially if what's purportedly relatively tight supplies right now, just really facilitating it. So I think that's probably why front end of the market is really starting to gain. Plus, it just feels like the managed money has been dogpiling back in after kind of taking a step back. We saw open interest increasing about 4,000 contracts yesterday. So I think that's really what it's going to be. It feels like it's a discount kind of cash-led market right now, and futures are playing catch up. So see if there's more to be, but right now it just looks like technically it looks really good right now. So see if there's some follow through.
Very good. Appreciate the update there. One thing to note, we will have weekly export sales out tomorrow morning, 7:30 Central. So we'll take a look at those and then visit about them in the war room. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. We'll get a quick readout here real quick as we wrap for the day. September corn down 2.5 at 385. Sep beans are down 4 1/4 at 1024.5. And September Chicago wheat's down 8.5 at 501. So again, thanks everybody for tuning in this morning, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at AgYield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.